So what are my predictions moving forward? So, barring any major US banking crisis, like, hopefully, Wells Fargo or Bank of America or one of these big banks don't fail. What's up, guys? This is Yosef Adde, your South Bay real estate specialist. I hope you all had an enjoyable holiday season, and I'd like to talk a little bit today about the future. The future in terms of, what the real estate market will bring here in the South Bay. Now, obviously, nobody knows what the future is really going to pan out to be, so I'd like to share with you some stats that I've been tracking and my reasoning for my predictions. And, you really can't predict the market unless you have a sense of where interest rates are going, to be honest with you. So let's start with a discussion about interest rates first. Now, as you all know, interest rates were as low as 3% in 2021 and the early part of 2022. And then in the middle of 2022, we started to see that rise, 4, 5, even 6%. And that really put, hit the brakes on demand for buyers. And as they've come to really absorb these changes and it's kind of settled in now with these higher rates, I'd like to show you this chart here. Interest rates peaked pretty much right around 8% in October, and they've started to come down since. And now rates are sitting right around 6.62%. That's a big drop just in even the past few weeks. You can see that big drop here on the end of the chart, and that's basically what's going to be fueling higher demand moving forward into the spring of 2024. So what are some potential problems we could run into in 2024? Well, any number of things could happen, and people have been predicting a real estate market crash now for over a decade, and I just don't see it happening anytime soon, to be honest with you. But there are a couple things I have concerns over. One of them being the commercial market, and the other is credit card debt. Now, as some of you may or may not know, commercial properties really can only get loans that are locked for 3 to 5 years before they're forced to refinance. Sometimes they can get longer than that, but typically most of them are in that 3 to 5 year fixed. And so once they start to mature, they'll need to either refinance or sell that property. And now many have been waiting and waiting as rates have been going higher and higher. And now even though they're coming down, it's still much higher than it was when they got the loan, 2, 3, 4, 5 years ago. And so you've seen prices come down in the commercial market as well, and more sales. And in some markets, you even have investors walking away from, huge portfolios. Like there was one group in Texas and Indiana, they had over 20 hotels, and they just basically walked away from those hotels because the numbers just didn't make any sense anymore. And so if there's a lot of defaults in terms of commercial properties in 2024, that could put pressure on banks and make it tougher for residential lending. So that's one cause for concern. I'd like to bring your attention to this chart over here. And you can see here, this is credit card debt in the United States. Kind of creeped up in the end of 2019. And then we had COVID in 2020. Then we had a ton of stimulus and programs from the government, and that kind of went down, people paying off debts. And then you basically had higher inflation. And that higher inflation, in order for people to, continue to have the same lifestyle they enjoyed for, previous years, they've been forced to spend more and more on credit card debt. And you can see right now, we have over $1 trillion in credit card debt here in the United States. So obviously, credit card debt is something to be a little bit concerned about. And we basically, at this point, we've reached the peak of, where the market is as far as, the economy. Things are going to start to cool off in the economy with markets are anticipating, rate cuts from the Federal Reserve. And that's why you've been seeing mortgage rates coming down. And we just don't know, but something eventually is going to end up breaking. Maybe it's, commercial banking is going to fail. Maybe, like we saw Silicon Valley Bank failed last year, but those were, small regional banks, nothing huge. So the question is, are we going to have something big break in the market, or is it going to be small and contained? Obviously, like a major war or like a huge US bank failing, like, Wells Fargo or Bank of America would cause, serious problems. But barring any, anything like that, we should be okay. Now let's talk about distressed listings for a minute. And with distressed listings, I'm talking about basically like foreclosures and short sales. So for right now, we have basically 177 homes on the market that are either short sale or foreclosure, which is basically like almost nothing. And so, don't listen to the headlines you may hear in the news. Foreclosures are up 50% or short sales are increasing, 80% or whatever. It's just a bunch of baloney. I mean, you'd have to basically have foreclosures, increase 10,000% for it to get anywhere near where it was before, where it would put pressure on homes. So there's not going to be any kind of distressed properties really anytime soon, and I definitely wouldn't count on that. But now let's talk about, where home prices have been this year. Let's look at this chart over here. This is from my website. So basically year over year, we are higher now in terms of pricing. And we're pretty much the same where we were at the peak of 2022 before rates started to go up. So we pretty much recovered all pricing, and we're actually setting new records in terms of pricing in the South Bay. And that's where we're at currently. Let's talk about inventory. I'd like you to take a look at this graph here. So it basically shows two different kinds of data. So we have in the black, the days of inventory, and then in the turquoise, we have days on market. So what's the difference? So the black line indicates the days of inventory. So basically this includes all homes currently for sale right now. So we have homes that are priced well, homes that are, maybe a little bit priced too aggressively and they've been sitting on the market. And some of these may even eventually, drop off. So, and then you look at the turquoise line, and the turquoise line is basically homes that have actually sold. So how long did it take for them to sell? Right now, the average days on market here in the South Bay for homes under 3 million, we're right around the 30 to 34 range in terms of days on market. Now, in terms of the days of inventory, again, in the black, we're right around, we're currently at 82. The 30-day average has been 65. So we're still in a slight seller's market. And basically, when you see that divergence in the black going up and the turquoise being flat, so that basically means we're having a slight accumulation in inventory, and we're approaching a more normalized market. So moving forward in 2024, who's going to be actually buying or selling homes? Well, it's going to be a lot of the people that were on the sidelines, kind of hunkering down in 2023. They had a 3-4% mortgage, didn't want to move despite maybe a growing family or wanting to be closer to work. And so they just kind of made things work where they currently own their home. And now these people, obviously they didn't want to sell when rates were 7-8%, but as it gets 6% or possibly even lower, it's going to become more and more attractive for them to sell their home, give up that 3 or 4% interest rate and buy something else. So what are my predictions moving forward? So, barring any major US banking crisis, like, hopefully, Wells Fargo or Bank of America or one of these big banks don't fail, or, God forbid, we're in war with, Russia or China or Iran. So barring anything crazy like that, these are my predictions. Number one, we're not going to have any significant increase in distressed listings as far as, short sales or foreclosure. It's going to be pretty much flat again for the rest of the year. Number two, interest rates will be in the 6.5 to 5.5% range for the year. Obviously lower towards the end of the year. Number three, we'll see higher demand, which is going to cause probably right around 10% more closed listings as buyers start to come back into the market. Number four, bidding wars are going to be coming back again, and especially for the most affordable homes. Number five, millennials are going to be priced out of the market, unfortunately, unless they have, strong income and strong terms. It's going to be tough out there for those most affordable homes. Number six, homes under 3 million are probably going to see about a 3 to 5% appreciation in price here in the South Bay, if you ask me. And number seven, luxury homes, over 3 million are probably going to take longer to sell, and we'll probably see about a modest 1 to 2% price appreciation. And my last prediction, number eight, and I'm going to cross my fingers here, is that Joe Biden will not be elected for a second term. So I know what some of you guys are thinking. You're like, come on, man. But he's done, so he's not going to be president. And that's it. If you found this video helpful, especially if you're the analytical type, be sure to check out my website and get access to all my weekly stats, where I give a weekly assessment in pretty much real time of everything that's going on, so you can stay ahead of your competition. You don't want to find out months later, after the market's shifted, when you're actually ready to buy or sell a property. So whether you're a buyer or a seller, I like to give my advice. And please consider subscribing to my YouTube channel, and be sure to follow me on social media. And if you're looking to sell in the next year or so, I can't stress enough, as we get into a more balanced market, the way you price your home is going to get more and more critical. So you don't want to miss out on the opportunity of getting $20,000, $30,000, $40,000, $50,000 or more, just because of a bad pricing strategy. So I'd be happy to give you a quick, no obligation evaluation of your home, even if it's not looking like you're going to sell right away. Just give me a call and get on my calendar for a free consult. And if you're looking to sell in the next few months especially, definitely reach out. And if nothing else, just to get a second opinion on valuation and what it is I do with regards, and what I would recommend as far as the best marketing strategy for your home, in order to cause it to sell for the most money possible.